Welcome back to the Decarb Connect podcast. And this week I'm talking to Joe Raia, who's Chief Commercial Officer of the Abaxx exchange. And Joe, maybe you could do what I always ask people to do, which is just to give us a sense of how have you arrived at this point in time where I have managed to lure you in to the Decarb Connect podcast.
Thanks for having us first, Alex. Not so sure how much time you have, but I certainly can go into my long career, which got me here, which really started out in the hydrocarbon markets. I was a former merchant marine officer. I sailed on oil tankers, so certainly atypical to somebody that's involved in environmental markets. But I did sail in the energy markets, in the oil markets for about 9 years, and then got involved in energy trading when I came ashore, which led me to the NYMEX. So I was hired by Vince Viola, who was the chairman at the time back in late '01, right after Enron defaulted and right after 9/11, to come into the NYMEX to build a platform for clearing over-the-counter energy products, which the exchange had no connectivity to. The exchange for over 100 years was primarily 3 products in energy, 2 products in metals. And so there was all these derivatives that were trading out in the marketplace. And after Enron defaulted, counterparty credit risk was a big issue in the marketplace for those over-the-counter derivatives. And we and the customers of the exchange were looking for a better way to use the risk management systems that the exchange has for these over-the-counter products. So I came in, we built and worked with the regulatory regime at the CFTC to build this platform, which turned into Clearport. Clearport arguably was one of the big reasons why the CME merged with the NYMEX in 2007. And it was really focused around how quickly we can launch products because we owned our own clearinghouse. So the marketplace was telling us, okay, we started out with 15 products, and most of them were in natural gas, and most of them were natural gas basis contracts in the US, which were financially settled. But we found that when we started rolling out these products, these 15 products, customers came to us and said, there's about another 20 or 30 or 100 products that you need to also list that trade as compatible products to those basis products to Henry Hub and other products, even in the energy and oil markets. And so by the time I left the NYMEX in 2011 to go over to Goldman Sachs, I had launched almost 2,000 products and individual products. And that kind of speaks to what we're doing here at Abaxx with our clearinghouse. But it also speaks to the kind of the entrepreneurial spirit that we had at the NYMEX, and in the market, and connectivity, most importantly, with the customers across all of the commodity markets, not only in energy but also in metals, to launch this platform. It was extremely successful. Arguably, I think when I left, was generating about $300 million a year in very high margin revenue for the NYMEX. But most importantly, it was bringing out a new platform for better risk mitigation across the entire commodity landscape. And so I went to Goldman Sachs. I was in charge of their clearing for energy and metals products in the futures markets on the sales side globally for them. I was there for 7 years. We brought in a lot of new customers on the commercial energy and metal space to Goldman. But the problem with the banks was basically Basel III. And as Basel III really started to impact financial firms like Goldman Sachs, like the other bank clearing firms, the capital charges that we needed to hold against futures clearing got so onerous and so punitive that we started to basically decouple from a lot of these commercial firms that were clearing with us. And excuse me, I left in 2018. I went to a small clearing firm, R.J. O'Brien, for a year and a half, which they thought wanted to get involved in energy markets, but then decided not to. And then I recoupled with a couple of my friends, both from Goldman and the NYMEX here at Abaxx. So Dan McElduff, our president, he was really my partner in crime when we built Clearport and launched it back in '02. And then John Noring, who was running natural gas trading at Goldman Sachs, was one of our founders here at Abaxx. And also Josh Crum, who ran metals research for Goldman in London. So had a lot of connection points with the founders of Abaxx. It was a very compelling project, certainly a startup. And when you're going up against the incumbents like CME, like ICE, certainly I competed with ICE 24/7 for the better part of 12 years. And I know the NYMEX, now CME, probably equally as intimately as I do the ICE. And so I felt that, looking at how the exchanges developed into new markets like environmental markets. We launched the Green Exchange at the NYMEX back in 2007, which the CME decided not to pursue anymore, which I think was a big mistake. But when you look at the interaction between exchanges, just like we did when we launched Clearport, and the end users in the marketplace, the commodity trading firms, whether it's energy, metals, carbon markets, whatever, the way you develop new products, the way we launched 2,000 products at the NYMEX over those years was because we had direct connectivity with the end users in the marketplace, the trading firms, the bank FCMs, the brokers. They were all very important to the ecosystem of commodity futures clearing. And so Abaxx was taking that same direct approach, and I felt it was really an opportunity to certainly, risky joining a startup, but we were launching a full stack clearing house and exchange, and that gives us, like I said earlier, when launching those products, you can't do that if you're outsourcing clearing. And so going to an entity like Abaxx that was launching a new clearinghouse, a new exchange based in Singapore under the MAS is really an important part of why I came over here.
Okay. And then in this kind of mad Venn diagram of people that I end up in touch with, you kind of came into my field of vision, because obviously we at Decarb Connect look at these kind of core foundation industries and how they manufacture key materials. And your clients are trading many of those materials or looking at ways to trade. And I know it's LNG in particular that we're going to talk a little bit about. Do you want to just set the scene around the kind of the carbon neutral offsetting activity that
Yeah,
that
the
you're also
first product, obviously any new exchange or clearinghouse has to have products, and certainly we didn't want to be an exchange that was launching lookalike products to other existing products. From one of our founders, John Noring, who again was involved in the natural gas markets, as when you look at LNG and how LNG was developing from mostly a term contract structure to now almost a 50% spot market, that has changed the access in the marketplace to spot cargoes, right? Spot cargoes never existed before. They would generally, a firm would start production in, say, Indonesia or Malaysia, and then would contract with, say, Japanese utility to run that LNG almost in the pipeline, but on ships for, say, 20 years. And that LNG was priced against crude oil. It was priced against Brent crude oil. It was priced against things that were totally uncorrelated to the LNG marketplace. So it was really important to look at what was the issue in the marketplace. So it was two things. It was really the increase in spot markets and cargoes, and also the increase in the need for hedging with a better pricing instrument, right? And so we looked at and really got connected with all the trading firms in the marketplace. We put over 100 NDAs in place with trading firms to talk about the specifics around cargoes and what was needed and what was the better price reference point. Not a financial instrument either, a physically settled instrument. And so we developed two LNG futures contracts, global futures contracts. One for delivery in North Asia Pacific, the second one for delivery FOB in the U.S. Gulf, and the marketplace vetted those and gave us a lot of input on the terms and conditions. So that was started in the middle of 2018. As we started going into probably a year plus ago, we started getting a lot of feedback from firms saying, hey, we like your LNG contracts, but we're starting to really focus on carbon offsets and carbon neutrality. And can you find a way to associate carbon offsets with your LNG contracts, futures contracts? And so, we really started that direct interaction with the marketplace once again to see what is possibly the best way to do that. We set in motion a carbon neutral working group that we now have. We've had 4 meetings on, and we've had 25, 30 firms in each meeting. So, all the who's who in the LNG trading and in the carbon marketplace. And so, not that we're going to be coming to a definitive solution, but we think that we're exchanging ideas as far as how is the best way to associate carbon offsets to that LNG futures contract. And we've looked at a lot of different ways. We looked at directly embedding those carbon offsets in the futures contracts. We didn't think that was a wise way, because you might might inhibit the liquidity growth of the LNG futures contract. We looked at allowing the firms to do them themselves and then associate as a bundled contract with LNG. But I think the most important part is we wanted to be the kind of the scorekeeper in this whole thing, not the referee. And we didn't want to force firms to be the, say, well, this is the way you have to do it. And I think that's the way we succeeded at the NYMEX back in the day. And I think that's the way we're going to succeed here in the carbon offset markets for LNG. Clearly, there's no leader out there. The marketplace is still, searching for leadership, standardization, all the things that make, regulated futures markets the success that they are. And for right now, there really is no leader in that carbon offset, that carbon neutral for any products, let alone LNG. And so we started there, but we know that there's applications across all assets of the commodity markets.
And are there other assets that you kind of got your eye on that sort of feel like they're on a short list, or are you kind of staying focused on those LNG contracts for now?
I think the good thing is, again, going back to my earlier comments about how many products we launched at the NYMEX, having and owning our own clearinghouse certainly is time consuming, costly. It's not easy, and we're going up against some pretty powerful incumbents. But knowing how nimble we are, we will be able to launch products on our own timeline, not on somebody else's timeline. And we can obviously keep the cost down, and we can be, directly, as we did back in the day, we can be directly connected with customers to get their feedback on what is the best, next products to launch. Clearly, our leadership at Abaxx has historical ties to the metals markets, both precious and base metals. One of our founders is Josh Crum, was the head of metals research for Goldman Sachs. Robert Friedland, one of our main investors, our original investors in Abaxx, owns Ivanhoe Mines. So there's definitely a lot of, as you see in transition energies with battery metals being talked about so much, there's still really no physical futures in an ability to hedge risk in the physical battery metals futures markets. So we see that is an opportunity for us. But I would say even in energy alone, there are firms that we're talking to that say, hey, we get it. We like your LNG futures contract. We need offsets to Permian Basin crude oil, to heating oil, to gasoline, to naphtha, all the things that are all these firms, not only the producers of it, but the end users in the manufacturing side are going to need some type of offset to any of the components of the products that they're making.
Do you get much of a sense from the traders that you're dealing with? Like, are they interested in the actual carbon neutral fuel, like where the emissions are no longer a part of the process, or is it just what's in front of them at the moment, and therefore we're focused on those offsets?
From a responsibility factor, they're probably interested in the quality of the offsets, the type of projects, and clearly firms are going to be measured on that. We know from our discussions with some of the very large investment banks in commodities and also environmental markets now are very focused on scoring the corporations and all the companies that they lend to, and they're looking before they even go into a meeting. They'll do a pre-score on the firm that they're going to meet with to say, okay, this firm has this type of program in place for social governance, for environmental offsets, for all the aspects of ESG. And then when they do a lending program with a firm, they're going to do reviews very, very quarterly or even more closely to see where that firm stands on their commitment to their ESG standards. And if they don't meet those standards, they have covenants in their contracts now that will raise their interest rates and which will cause a higher cost to them if they don't meet that. So clearly, there's going to be a cost to non-compliance. Clearly, there's going to be more focus on compliance, but I think we need good measurement and verification tools to make sure that the standards that are in place for all these firms are somewhat, are standardized, so that you can say, okay, I meet this criteria here. This is a global standard. We can put our hand on heart and say, we invested in this carbon offset project that's a nature-based project. We know it's verified. Those are the things that are going to be, I think you're going to see narrow in scope as the market develops. Because clearly right now there's no leader in the space. And we think that from what we're developing here at Abaxx, we can be the leader in this marketplace, both from a product perspective, but also from a technology perspective. We haven't talked about technology, and that's a big part of this. And what we've been developing here from authentication tools and verification tools, and also the use of distributed ledger technology. I don't like to use the word blockchain. That seems to be a cure-all for everything, but distributed ledger technology for better, more efficient trading, margin settlements of contracts. That's some of the things that we're developing here that we know will be a game changer in the marketplace.
Is the idea that that technology could itself start to track the origin of the offset and itself? Is that what you're saying?
So when you look at the current mechanisms for engaging with registries, so clearly right now there's more than 70 or maybe even 75 different registries out there, and of varying quality projects. Again, if a corporation, say a huge multinational corporation has a manufacturing plant in, say, Malaysia for cell phones, and they want to make sure that their production is their footprint is carbon offset. They're going to want to go to a registry, and that registry is going to have verifiable projects. A, they can't be double counted. B, once they're retired, they're not going to be used again. And all of that daisy chain of from contract to retirement is again monitored along the way. And that's right now is a very difficult project. A, the connectivity to the registries is difficult from a technology perspective. The retirement procedures are very onerous and time consuming. So there is really an opportunity to apply better technology to that. And then when you add clearing and futures clearing to that, you also have this the risk involved in counterparty risk, which futures markets generally not eliminate, but help reduce it quite a bit. But also the margin payment. So if you contract with a futures contract and you need to flow margin back and forth between your clearing firm and your customer back to the exchange, distributed ledger can do that on a shorter settlement procedure or time frame versus the way it's done now, which is T+1 or T+2. So there are a lot of applications in the carbon markets and the offset markets that better technology, distributed ledger technology, can be applied to make it a much more efficient marketplace.
There's obviously a growing appetite for discussions and products around carbon neutrality with the traders you're talking to. I suppose kind of an obvious question is, do you think is that rooted in the new administration in the US, or has it been gaining momentum anyway in the last few years? Tell us a bit about what's your lens on what is driving that, really?
Yeah, clearly I think it's even it would be developing outside of any new administration. Clearly, it's accelerated over the past few months, but I think that acceleration was happening anyway. When you look at historical carbon markets, even when we launched the Green Exchange at the NYMEX back in '07, we were focusing on mostly on nitrous oxide and SO2 emissions for trading, which was allowing that marketplace to reduce the exposure to NOx and SOx in the environment. Clearly, carbon wasn't even kind of contemplated back then, but the European markets a few years later started to really take hold. They had issues over time. There was, obviously, people were trying to control the marketplace. Prices went up, prices went down. Firms went out of business. But I think the European markets now, from an EUA perspective, they've done a good job of now organizing that marketplace. It's a mandatory marketplace, so it's obviously the EU is overseeing that. When you look at the U.S. marketplace, totally voluntary. So I think the global marketplace seems to want to go that route versus the mandatory marketplace in Europe. The U.S. marketplace, for better or worse, has done very well. There are many states now that are participating in carbon offsets, renewable energy credit auctions and emissions, and there's a very vibrant marketplace in the U.S. for renewable energy credits, for carbon offsets. And so I think is there a hybrid approach? Is it partially mandatory and somewhat voluntary? I don't know. We'll see. But I think that's where there's a little bit of a lack of leadership globally and trying to find a global standard for carbon offsets, because clearly carbon neutrality, net zero, all the things that we talk about and hear about now on a daily basis, only in the past year to 2 years max has really become a focal point in the marketplace, in commodity markets for sure, in any energy markets without a doubt. I mean, just today, Oman and Shell agreed to another carbon neutral LNG delivery. So when you start seeing, national oil companies, national energy companies involved in this now, clearly it's a front burner item, and it's not going away. And so I think the sooner that we get to a better standardized marketplace for this, I think it'll grow even more rapidly, because clearly LNG, when you go back to LNG, the amount of LNG growth for a transition energy is not going away. I mean, even the EU said several weeks ago that the marketplace can't get to net zero without LNG and without natural gas. So it's going to be there. There is certainly a component of more responsible natural gas, and I think flaring and methane emissions will be something that will come under control and certainly be priced into the cost of producing natural gas. But the marketplace is the globe is not getting to net zero without natural gas.
When we were having the prep talk for doing this recording, you described LNG or green LNG as I think you used the phrase a bridge hydrocarbon, which I hadn't heard before. But I guess that's what you're saying there, right? Is that for many, yeah, this is going to be an essential fuel, an essential way of making those early steps. For industrials looking at this who are busy being told to just get on with decarbonizing everything, that I don't know, it sort of feels like some interesting messages, though, that certain things can continue as a bridge activity, some things must be decarbonized now.
From a personal perspective, I think it's I mean, you look at it in a realistic way. I try to be realistic about things, the way I look at everything. It'll be increasingly difficult to get to net zero. You're just not going to stop producing hydrocarbons. Cars, the amount of cars on the road today. We did a study when I was at Goldman Sachs, probably in 2017. I had a customer who ran the largest group of convenience stores in the United States. They call them C stores, and he was trading futures with us, clearing them with us, and he wanted to talk to our auto analyst at Goldman Sachs about capital infrastructure needs and potential spending for putting charging stations at their C stores. And so the auto analyst went through the development of electric vehicles globally, but particularly in the United States, and where we were then. That was only a few years ago, to where we could be in, say, 2030, 2035. And the percentage, the amount of growth of production of EVs versus internal combustion engines was just not going to catch up to where it was going to take a very, very long time. Probably, I think he said 2050 before there was going to be a significant inroads in the percentage of EVs on the road versus a normal combustion engine. So we have a long way to go. I think it's and clearly for all those years we're not going to we're still going to need oil and gasoline to power those vehicles. So it's not going away anytime soon.
What's next? So you've been running your carbon neutrality working groups. You have these plans for the offsets that will sit alongside futures contracts. What else is sort of boiling away that kind of speaks to how these traders want to be seeing some kind of way of getting to carbon neutrality?
Yeah, I think the first thing we have to get. I mean, we're going to launch sometime this summer. We're finalizing our monetary authority. Our regulator is the MAS, the Monetary Authority of Singapore, and we should be. I want to say, just fingers crossed, we should be hearing from them imminently on our clearinghouse approval. We already have approval in principle for our regulated market operator exchange license, and the clearinghouse is the next step. And again, that's a very timely, very costly process, but it's worthwhile to do. And so we're looking forward to that. And I think once we launch our LNG contracts, we'll be looking at, as I said earlier, probably base metals, transition energy metals, transition energies, products that the marketplace is telling us that they need. Carbon contracts, futures contracts. And so everything that we're going to be doing is futures contracts. And again, it's regulated. It's not an OTC market, and it's something that is very important to us and our philosophy and also our business model. But given the connectivity again to the trading firms, they're telling us that they want all these new products that the incumbent exchanges just haven't been focusing on.
Coming back to those working groups and the clients and future clients that you're talking to, what is it that you're hearing the most? Like, what kind of question do you come up against the most from them?
I think it's more around standardization. I said it earlier. They want solutions. They want better solutions. They want better um, a better kind of outlet for their ideas. They don't want to be forced into a certain box around how they trade. They want to be able to go on with their business really, and I think that's from the firms that are involved with us are big banks, big energy trading firms, big integrated oil companies, brokers in the marketplace. I mean, we have a really kind of great cross section of the commodity trading infrastructure, particularly in energy and LNG, that are participating. But all of them are pretty consistent in their messaging, and that they want a better solution. They want somebody to be a leader in it. And I think they've come to us because they think we can be a leader in this space, and we're really, we've gotten incredible interaction and comments from the customers that are participating in this that they're very excited about this next phase in energy trading and risk management, more importantly, using a new exchange like Abaxx.
Yeah, good luck. Exciting to see how this can evolve. Thanks a lot for talking to us.
Thanks, Alex. It was a pleasure.